Hello, everyone. My name is Doug Crenshaw. I'm with Copeland Morgan, real estate firm, and I work with a lot of investors. But what I'm going to go over is my repairs Mayo rental analysis form that I use, and it's an Excel spreadsheet. So it gives you all the facts and figures. It obviously doesn't give you the emotional aspect of it, but if you're an investor, you're not worried about emotional because you're not trying to buy it for your own family. But if you are buying it for your family, then this will give you a good idea. If you look at under, and I'll explain later, but the Mayo is going to be kind of what your maximum allowable offer would be on a property. So it's an easy way to use all that. So with that being said, I'm going to go ahead and get started on this. So hopefully you can, if you see me, I'm looking up at my bigger screen instead of my little small computer screen. So but anyway, this is the form, and when it opens up, the information input tab comes up. Here's where you put in the street address, the city, state, heated square footage, and your total square footage. And then this X, and I'll explain what this means, but minimum repairs, and I'll go over that, and that's basically what it is here. Replace roof, paint exterior, interior, flooring throughout, new appliances, and landscaping. That's just a basic get started package on getting a renovation done. But it is what it is. So asking price is whatever they're asking for it. I put in 20% down if you're a 10 percenter, or if you're going to do all cash. Then if you're doing all cash, you just delete these two, interest rate and down payment out. Leave the 30 years because in that way it gives a calculation later. I'll show you that. Closing cost is typically about 3%. If you want to make it higher, you can do that just to kind of put a little cushion in there. That's up to you. Profit desired, I put in 10% as a fix and flip. If you decide you want 15% or 18% or 5%, it's up to you. You can change that number real easily. Rental income, this automatically calculates. If you look up here, you can see the calculation here, and it's basically taking um, those numbers and creating it off the least price per heated square foot, and I'll show you how I give you that information as well as the sold price per heated square foot, so you can get all those calculations. So this is kind of where you put in the information to get started, and then it goes over into repairs. I was telling you the basic repairs that I put in, and this is all based off of your square footage. So as that changes, you'll see that. I'm just going to quickly go through this, and then I've got one that I've already done for another investor, and I'm going to share that with you so you can see actual numbers instead of just my fictitious numbers in here. But basically, you're 350 a square foot for times your total square footage, 5,200 to replace the roof on this one, 1,500 to paint it, 1,500 for minimum landscape. Um, Looking down here a little bit further, um, if you're replacing appliances, I always recommend that for investors. It always looks nice. Painting the inside, doing the flooring. If you want to upgrade the flooring, if you're in a higher valued home, you may want to upgrade that. Same way with the landscape. If you want to upgrade that, you can do that as well. But you can see here, like 50 cents times the total square footage comes out to $750 for landscaping. That's mulch and a couple of bushes, maybe some flowers. That's it. So, flooring, same thing. You can do that. You can put in like some of the homes, especially in St. Pete, they have all the hardwood flooring. If you want to replace that, if you want to just refinish what's already there, you can do that. You can put that calculation in. And then moving over here, if it's going to let me, there we go. Up here, systems. If you know the plumbing's really horrible, they got lead pipes and all that kind of stuff, you want to change it all out to PVC, then you just put in your heated square foot. So you can say 1,200 is your heated square foot. That would come out $3,000. You can get all your plumbing done. Electrical, if the panel inside is bad, but the wiring is good. It's not the aluminum wiring, it's copper wiring. It's just they needed to replace the panel. Put in a one there, and it comes out. There's your $1,000 for that. If you want to upgrade your service panel, again, one, and you got it upgraded. Hot water heater, if you want to replace those. HVACs, Obviously, these numbers are just kind of estimates. I typically get with a general contractor annually just to kind of go over these, make sure these numbers are somewhat accurate as far as an average. Some may cost more, some may cost less. If you're doing a duplex, it's a smaller, 700, 800 square foot, unit. You may not need to spend 7,500, but if you're going to do both of them, then you might need to spend for both of them. You would be able to get both of them done. Or if you're just replacing window units, you see that they've got 8 in the house and you want to do that instead, you can do that. I don't know what that is, but we'll get rid of that. Then down here is miscellaneous. I always put in this, which is a surprise repair amount, as my, one of those things that you find, you got sheetrock that's bad, you need to get it replaced, or doors, or whatever. It's just something extra. It's got a pool, there's some things there, new fence repairs, debris removal. If there's just something here, if you want to put in driveway, you want to replace the driveway or put in a driveway, and let's say it's $3,000, and you just want one of those. You don't want to put in 2 driveways for one house, so that adds in. So what that does is it tells you miscellaneous, all that kind of stuff, and if you go back up here to where the repairs are, it gives you your total for exterior, interior, systems, miscellaneous. So there's your total repair cost. And what that does is it goes over here to the Mayo calculator. This address over here is all going to be included already. It's already going to upgrade, and I'll show you that shortly. But you can see here the list price is already in there. The after repair value based on what's in there is $148,000. So this one with a red number there, horrible. Don't even want to try and touch this one, only because that's already $100,000 overpriced for what its actual after repair value is. So I put the plus and minus 5%, just depending on buyer market, seller market. Kind of gives you a range of where you might want to be. If you said, Doug, I want to buy this for 180, it's like, well, my after repair value is only 156 max, so you might not want to do that, but that's your choice. You're the investor or the buyer. So you can see here that $33,250 came right over here to the repair cost. That's your closing cost. There's your total expenses over and above the purchase price. Here's the 10% minimum profit there. So on this particular scenario, the maximum allowable offer would be $96,000 to get you $15,000 and to cover all your expenses. That would be the most you would want to put on this property if this is a true property. Rental analysis, if you were buying a duplex, triplex, quadplex, or getting into commercial 5 or more, this is where that would go. This auto populates from the list price, and this auto populates from the ARV price. These numbers can alter. You can alter them as you need to. If you wanted to make that 250, then you could do that, but it's already calculated there. So let's say you want to put in an offer of 200. Then it recalculates everything and kind of shows you where all that is. Gross potential income, that was again comes from the information sheet where it was the least price per heated square foot, and that's what your rental income would be based on your square footage. So it multiplies by your heated square footage times your least price per heated square footage, and that's what that number comes in at. If the listing says that they're getting $2,000 a month, by George, I'm going to go over here and go $2,000 a month. I'm not going to worry about that calculation. I'll go, woohoo, bonus, I got more than what I needed. So anyway, here it shows you the effective gross income. These are all costs that I have in there. Lawn care, if you don't want to do lawn care and pest care, that's you can just delete that right out. If it's a rental property, you're probably not going to have to worry about that. If you're buying it yourself, you might want to leave it in there just so you can see what your expenses are going to be, from all the mortgage and everything else. So, but that's basically more for somebody that's doing it as a rental property than anything else. Like I said, this is the rental analysis, so it kind of gives you an idea. Expense ratio should be around the 50% rule. 40 to 60. 60 is horrible. 40 is better than 50. But if you get into 20, then more than likely your expenses are a little off somewhere. If I put these numbers back in here, If I put those back in there, you can see now we're at 57. So somewhere the expenses are off. It might be because that's too high, maybe $100 a month instead. You can see how that number changes to 55. This one, if you got tenants, you're not going to have that charge. So now you're at 47. Over here, you're at 51. Bigger numbers to look at though. Your net operating income is good numbers here. But this rent versus acquisition cost, the 1% rule, these are both not in the right, frame of mind, so to speak. So let's put something in here like 160 and see what that does to that number. See, now it's at 1%. Now it's kind of looking better. Now this went from like 800 and something to 940, 11,000 a year. And your cap rate is based on the ERV formula. And if you have any questions about that, you can let me know. But it should be around 8 is good. But in this market right now, we're kind of closer, between 6 and 7. 7 being really good in the seller's market, but a lot of them are 5 and 6, so it just depends on what market you're in. Seller's market, you're going to be a little higher on the cap rate. I'm sorry, seller's market, you're going to be lower. On a buyer's market, you'll be a little higher. I don't know why that keeps asking me to change colors. I don't want to change colors. I like my shirt. Anyway, this also gives you your mortgage balance based on what we put in, and if you want to refresh, it's 30 years, 3.5%, 20% down payment, and it calculates it off of whatever price you put in here. So 128,000 is your mortgage balance after year one. Your year one debt service based on terms, that's monthly, that's annually, same over here. And you can see here before tax cash flow is negative, over here is positive. So you can tell that full price offer at 250 is just not a good number. Debt service coverage ratio, the number of times the net operating income is going to cover your debt service. So if you're looking here at 575, you're covering it by a little over 1.5 times, whereas here you're not even covering it. So if you're trying to get it financed, that's something that the lenders are going to look at and see what that debt service coverage ratio is. If it's 1 or more, it's better. The higher that number, the better it is for them. Break-even ratio is how full do you have to keep that rental property, get it to where you're covering yourself. So 96% of the time, if you bought it at 250, you'd have to have 96% occupancy. So you might have a half a month that you can go without a tenant before you have to get them replaced, or you're going to start losing money. Here at 73%, still it's good, but it's better than the other option at 160 versus the 250. So that's just a brief summary of that. This property here, let me pull this one up. This is one I did for an investor. It's here in St. Pete, 2,300 square foot total square footage. I didn't put any repairs based on the MLS listing, and this is the MLS that I send along with these forms, so you can see where it is. The $295 purchase price. Sometimes they have the heated square footage and the total square footage. But what it tells you is it's a turnkey. Kind of scary when they say that, but somebody's turnkey is another man's treasure and another man's junk. So anyway, fully rented triplex, bringing $32,000 a year. I'll show you what that is. Single family home up front, and then 3 beds, 1 bath duplex in the back. So each side has 3 bedroom, 1 bath. And here's where they break down what it is per month that they're getting. So they're getting $2,700 a month in rent. So I'll show you some other details in here, but it kind of gives you a little bit central air, that kind of stuff. For those of you that are familiar, it's fenced, there's lighting in the sidewalk, all that stuff. So then, of course, agent details and stuff. So there's also on the MLS sheet that I can see that I can't send to you. Gives me more details about showing and that kind of stuff. This is a CMA. What I do with it is, unlike Zillow and other sites out there, I take into account what's out there and I get rid of some of the ones that don't make sense. Like if they're here in this area of the country, we can we can have properties that are, trailer park and then a single family home and duplexes and apartment complexes and $1 million homes all within. Don't show this message again. Maybe that'll stop it. Sorry, I'm doing this live, so I have little issues here and there. But anyway, what I was saying is I eliminate some of the higher end stuff and some of the lower end stuff so that we get a better number that actually comes closer. This is what I call my quick CMA. It's not something that you can see. It's not something that I'm going to base every number on, but if we get to a point of making an offer, then I revisit what the actual real comps are and make sure our numbers are right before we put in an offer. But I typically would go with the median values. You have your max values, so that one shouldn't be in there, but it is. I messed up on that. Didn't take that one out. Minimum is 164. So, but those are the actives. And then if you go down the page, solds. Oh, that was part of. Here's the solds. So you got them 139 to 800,000 basically. The number on this that I'm looking for is a median value, and that means here's your max, here's your minimum, and it's right dead smack in the middle of it. So if you have 13 properties, one's in the middle, you got 6 on the lower end and 6 on the higher end. So that kind of gives you a median price range, not the average. You can see it's a little different. The average is here, and that's a $50,000 swing there. That's a close to $60,000 swing there. So that's why I kind of go with a median price when I figure these out. Again, that one probably shouldn't have been in there. I just noticed that. But anyway, we didn't put an offer on this one anyway, so it doesn't matter. But this number here, the sale price per heated square foot, that's the number you want when you go into your spreadsheet. If I can get back to that. That 175. Actually, I don't know why that's not there. 175. So, oh, this is my preliminary one. That's why. Okay, sorry about that. But at least you can see some numbers anyway, and I can fix it as we go along. So 175 is the number for that, and this is the CMA for the sales. The SLD is sold. The ACT is the ACT here is the active. Then I also do a CMA for active rental properties in the area, so you can see some of the values there. And then once you get past all the actives, you get into the LSEs, which are the leased ones. Those are the ones that they listed it on MLS, and then they actually leased it out for that price. So you can see 750. Some of them go up into the 4,000 mark. But you're looking at this price right here, which is the sale price per heated square foot again. But this time it's the leased price. It's not a sale price, but I don't know why they can't put a LSD other than maybe they don't have enough letters in there. But anyway, 177 per heated square foot. So I'm going to go back down. I got to look over my computer to get to it. And what's that number again? Rentals. 177. Sorry. So 1.77. All right. So now, hypothetically, we should be getting $4,000 a month for that rent. But if you go back over here to the MLS and you look here, they're only getting $2,700. So something's a little skewed there, and I think it's probably because I left in some of the higher comps and stuff that I told you shouldn't be looking at. So that was my fault. But anyway, just to show you how this all works, if you're doing a lease property, then you don't want, and this one was going to be an income producing property, so $4,000 is what you should be, but they're at $2,700, so I'll show you how to fix that. Repairs, I didn't put any repairs because it said turnkey. If we wind up getting into looking at the inspection will dictate if we need to add repairs in there. This one, the list price is for $295. The after repair value is $403. And that's based on the comps, which I've already showed you that 175 may not be as accurate as it should be. So that's why that number is way off. I did it in a hurry, I guess. So, but anyway, since it's a rental property, I'm not putting any repair costs because of the property being turnkey. So I didn't put any repairs in. Profit desired, no, because that's not a fix and flip. You're buying it for a rental property. So basically on this $391, that's way over the $295 price. So let's get into the real numbers and see. Let me cover this real quick. The 70% rule. There's some investors out there that go, okay, the ARV is XYZ, and in this case 403, and then they just take 70%, and that's going to cover all their closing costs, all their repair costs, their profit, their everything. So they just do it as that, and they go, I want to put in an offer of 282, 240, or they may round it to 282 or 283, whatever. But they don't care what that number is. They look at what the ARV is, and they do 70% of it, and that pretty much covers all your expenses and stuff. So I think it's a little bit more of a rule of thumb than it is make a decision on. So here, the 295 with the 2700. If you go all the way down through here, you can see all the net operating income, the before tax cash flow, all that stuff. This number doesn't look good at all. That number, ends at the bottom end of the line. But before tax cash flow, if $160 turned you on, then that's a good property for you at that price. Debt service coverage ratio, you can probably get it financed because it's over the 1%. Break even, you got to be 85% full. So this one, I put in a 280 offer, or we would have put in a 280 offer. Then the closing cost changes and all that kind of stuff. And then that's your total acquisition cost. That comes into play with your rent versus acquisition. So your 1% rule. If you were able to get 3,300, which is a little higher than the 2,700, based on 1,100 per unit instead of 900, comes out to 3,300, which you can see here is a little bit different than the annual there. It also gets you, if you paid cash, $1,684 a month coming in, or $20,000 a year. And then down here, rent acquisition, you're at 1.14, so that's a pretty good number there. And then there's your mortgage balance if you did finance it, and that's what your monthly income would come in. And that's before tax cash flow. However, we do have the taxes already set in here, so it's just another way of looking at your numbers to see what your bottom line profit's going to be. Your debt service would be about $1,000 a month, and you're looking at $12,000 a year. So that pretty much covers all that aspect of the sheet. So that should give you a brief overview of everything and how it all operates. And like I said, I give you all these tools to look at. So you got the MLS. So you don't have to go back through emails and find it. And then you've got the lease, the rental amounts, and you also have a quick CMA for sales. So that pretty much gives you all the information that you need. And the way I typically work it is whatever investor gets me a property address, then I kind of look it up for them and set it up. And then if they want to make an offer, they make an offer. If somebody else comes in after that, I let them know that I've got another investor interested and they're already putting in an offer. If they choose not to, I'd let them know, but I don't bid one investor over another. But hopefully this form would help you understand a little bit more how this all works. If you want to play with it yourself, then just take one of these, and whether you change address and square footage or any of this information, you decide you want to do a fix and flip, then you want to do 10% profit, you can put that in. Closing costs, if you want to put in 6%, you can do that. It's up to you, however you want to use this, but it automatically populates into all these forms. So you have that to run by. So if you have any questions or anything else, my information's there, but you also have an email. So I look forward to working with you and find a property for you. Thanks for your time.